Thank you for joining us on such a busy day. The stock's up 10%. So is your biggest competitor, Penn. Let's talk a little bit about who the competition is, how much this deal costs you, what does it do to your profit margins?
So this is an exciting day for us, Contessa. We've worked on this for quite some time. We've got an existing partnership with Caesars. This broadens and expands that relationship and gives us access to customer acquisition costs that should be extremely attractive to us. I can't disclose the actual cost on a per year basis. That's not disclosed, but we think this positions us well to be a leader in sports. We think there's going to be a number of winners in this space, and we're confident that we can be one of them.
Will it affect your margins?
No, it should not be material to our margins as a combined company. It's actually quite an attractive for all sides here.
Tom, there's a lot of chatter right now that this is looking an awful lot like a bubble, maybe the dot-com bubble of 2000. And Mike Santoli had just said, when I reported this an hour ago, that he's seeing hair trigger enthusiasm. He called it, it's kind of a gold rush. Are you concerned?
Well, we have not seen that to date in our equity. There's been very little in the Caesars shares for sports betting, so I'm not particularly concerned with our own stock. This is an enormous opportunity. I'd liken it to when states outside Nevada and New Jersey started to legalize riverboat casinos in the 90s. We have not seen a growth opportunity in this space in quite some time. So it's an adjustment for analysts to look at kind of a hyper growth piece of a business that has been mature. But we think there's a lot of money to be made here over time. And we're seeing a lot of interest from non-gaming operators, this ESPN agreement being the latest evidence of that.
It's Sarah. No question, Wall Street is bullish on betting. But what about your core business, Thomas? How would you characterize what demand is like right now in Vegas at the casinos?
So we've got two pieces of our existing core business, Sarah. We've got the regional markets where properties where you can drive to them and are generally not dependent on hotel stays. That business has been quite strong. Margins are up 1,000 basis points plus in that business. Revenues are down a little bit, but EBITDA is up sharply. In the destination markets, of which Las Vegas is one, we're trailing last year's numbers. Basically, weekends are very strong in Las Vegas. Weekdays are missing the group business. So we're running about 50% occupancy on weekdays and we're full on weekends, but that's been grinding higher as the weeks go by.
Tom, I just wonder whether all of this legalization of sports betting is moving a little too fast. I think you said hyper growth to describe it. And you obviously partner with William Hill in the UK, as you will know, that in the UK they've had to ban the advertising of sports betting in and around live sports events because of the levels of addiction it was causing. Is the US moving too fast from zero to flat out? And your partnership with ESPN is, I guess, a great embodiment of that. Might there be problems down the road?
Well, we're in the very early stages of legalization of sports betting. There's only a handful of states that are legal as we sit here today. I'd expect to see states that have budget issues related to the post-COVID era that may look to sports and online as a way to raise tax revenue. But all of these states that have legalized already had gambling prior to the legalization of sports betting and had, nothing in the way of the problems that you highlight there. This is really just another piece, another option for bettors, and every regulatory agency is keenly focused on managing responsible gaming, and Caesars itself is a leader in responsible gaming going back for well over a decade. So we think we have the situation in a great place.
And this is actually Responsible Gaming Week, and the American Gaming Association just reached out to talk about new technology that creates a bubble so that people can bring their restrictions with them across state lines. It's pretty remarkable. Speaking of advertising, you're not a big believer, Tom, in the paying a lot to market your product. Your competitors definitely have a different approach. How do you grow profitably this giant business without the costs involved with marketing?
Well, you've seen the bulk of that stripped out post-COVID just in what you're restricted from opening for public health reasons. It's a lot of what you use for marketing. It's your buffets, your food and beverage, your promotions that gather significant crowds on a Friday or Saturday night. So all of the operators are seeing what their operations look like without those subsidies in there. I'd expect everybody to be sticky on the way back. I can assure you that we will be. And then on the sports and online side, this is the key to this ESPN deal for us. This is an attractive way to access a gigantic potential customer database and bring them into our system.